This is an uncovered Japan company research report on OPTiM Corporation, ticker 3694. OPTiM is Japan's leading mobile device management vendor, with a sticky core franchise and a much newer AI and agritech growth story. In the next few minutes, we will separate the established cash-generating business from the opportunity that still has to prove itself. At the report date, OPTiM traded on a trailing price-to-earnings multiple of about 21 times and a price-to-book multiple of 2.49 times. The balance sheet is strong, with a 74.7% equity ratio. The research score is 16 out of 20. Its macro fit is compelling, but the valuation is closer to ordinary IT sector levels than to a clear bargain. The easiest way to understand OPTiM is as one technology platform with two engines. OPTiM Biz helps corporate customers manage smartphones and other devices. The company then applies related AI, remote control, and data capabilities to agriculture, healthcare, and government use cases. That gives the story potential, but it also means investors need to distinguish today's proven device management economics from the investments that may pay off later. OPTiM has grown revenue for 26 consecutive years. From fiscal 2022 to fiscal 2026, sales rose from 8.3 billion yen to 11.7 billion yen, a 9.3% annualized pace. Operating profit grew more slowly, from 1.5 to roughly 2.0 billion yen. The report's interpretation is deliberate reinvestment, especially in agritech and AI, rather than a collapse in the core business. The segment mix explains the investment case. The AX business, which includes systems and AI services, provided just over half of revenue, but almost 4/5 of segment profit. Agritech grew faster, at 22.4%, but remained loss-making. The upside is obvious if that business reaches scale. The risk is that the profitable core continues to fund it for longer than investors expect. The core moat sits in incumbency and switching costs. OPTiM Biz has been Japan's #1 mobile device management service for 15 years and serves more than 180,000 companies. Its stock revenue ratio is 81.5%, which points to a recurring base. But this is not an unassailable technology monopoly. The report highlights the risk that free or bundled foreign alternatives, including Microsoft Intune, pressure the mass market end of the franchise. The financial foundation is unusually solid for a small, reinvesting software company. Operating cash flow remained positive through the period, and free cash flow turned positive from fiscal 2023. Fiscal 2026, operating cash flow was 1.59 billion yen. With effectively no debt and a high equity ratio, OPTiM can fund the agritech and AI build-out without relying on outside capital. The trade-off is that excess cash has not historically translated into regular shareholder returns. The balance sheet is a clear strength, but it creates a governance question. The equity ratio has stayed near 75%, while return on equity has eased as cash built up. In 2026, OPTiM announced its first buyback and a shareholder perk scheme after 26 years without dividends. That is an inflection, but the report stopped short of assuming a durable return policy change. Management's plan is coherent. Defend the device management cash cow, bring agritech toward break-even around fiscal 2028 or 2029, and reuse the AI platform in healthcare and public sector applications. Japan's labor shortages, digital transformation policies, and smart agriculture support are helpful tailwinds. The open question is generative AI. It can expand OPTiM's addressable market, but it can also make parts of its offering easier to copy. Valuation needs context. OPTiM's earnings multiple has fallen dramatically from the theme stock era, when its fiscal 2022 median was more than 113 times earnings, to around 21 times at the report date. That looks cheap against many SaaS and AI peers, but only roughly in line with the broader IT sector. The market is paying less for the dream, while still asking for evidence that the second engine can earn its keep. The report's 3-year scenarios illustrate why execution matters more than a single multiple. The author's estimates range from roughly 6% downside in the bear case to 76% upside in the base case, and much more in the bull case. These are not forecasts or recommendations. They depend especially on agritech break-even, the durability of the MDM franchise, and whether management turns balance sheet strength into better shareholder outcomes. The concise conclusion is that OPTiM is a quality niche leader discounted for real reasons. The core MDM business is sticky, profitable, and well-placed in Japan. The AI and agritech expansion can create value, but it still needs to show scalable profits. For investors following the story, the most useful indicators are core retention, agritech losses, and break-even progress, competitive pressure from bundled tools, and whether the new approach to capital returns continues. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.